Hello, my name is Shanawaz Anwar, and today I'll be talking about inflation, cause and cure for the saver. Inflation generally is measured by economists through a benchmark, which is known as the Consumer Price Index. It's a basket of goods and services that's measured from one period to the next. And if we're tracking the CPI as an observer, you can notice volatility, but the meaning doesn't really relate to purchasing power of the consumer over a given time. Pain, however, would be noticed by a frugal or conscious consumer. So in this, we can see that we have a projection of 15% increase in inflation for the things that we buy going into 2026. Also, I'd like to discuss monetary policy by the Federal Reserve. They provide currency supply, which is known as the M1, and it's institutional liquidity um, put into the markets, such as banks and that loan out funds for businesses. And the strength of the dollar is derived by demand of it. We know that we've been utilizing something called petrodollars, oil traded in dollars. There's always been a constant demand. However, a new platform is being propped up called BRICS, and if they are successful, it would reduce the demand of dollars globally. So in this chart, we see that our dollar supply has increased 16 and a half times since 2000. Also want to bring up the debt, United States debt in relation to inflation. And we've all noticed as taxpayers is that the government has steadily increased the budget since 2000. Bailouts, even though some being repaid with interest, haven't has not reduced the debt. And matter of fact, since 2000, um, our debt is six times over, the time of 2000. And we can look at the M1 and the U.S. debt as, in accounting terms, credit and debit, and debit and credit. And the debt has been discussed throughout the decades as a major risk for the U.S. For a long time now. So, as a consumer, how can we protect ourselves if the government is spending and then we're seeing more and more dollar supply coming into the market? Well, historically, the simple inflation hedges has been gold and silver. This gold specifically has been used as a rainy day fund throughout history for many cultures and civilizations, and it was used or backed by modern currency up until the 70s, as far as the United States is concerned, until President Nixon took the dollar off the gold standard. And what is interesting is that the BRICS platform that's being developed, they're going to have gold-backed CBDs. So they're going back to the gold standard. Um, and so if we just look at this chart, we see a steady increase trend line, and the value since 2000 of gold has increased 850%, and is projected to keep on rising. And the same could be said for silver prices, which is 650%. However, silver is 17 times more abundant than gold is. So, you know, some things to think about when benchmarking your purchasing power. And there are institutions that will hold your physical gold and silver for you in volts. And also, Wall Street, you can buy shares of ETFs of gold and silver to protect your purchasing power as a consumer. Thank you.